Hey guys, username here. I'm going to do a trade review from 12/2 last Friday on the only trade I took on my small account. It was on a call out from the Discord, and it's going to take a while, so I'm going to try to rush through it. I don't want to get past any points, but there's a lot of information here I want to convey. This is not going to be a normal trade review. This is not a winning trade review where I brag about how great of a trader I am. This is a trade review that's a horrible trade. It's a really good lesson in how to blow up an account. It's everything not to do that I did, and it's the rationale behind how I tricked myself into making the chart look like I wanted it to look, to move the way I wanted it to move, instead of taking a loss when I should have taken a loss. So the trade is on NVDA here. It was on, right here was the call out price at 78 cents. And my entry, I'll make a little mark here for my entry. My entry was right here. So it was that close, and didn't seem unreasonable when I got into it. But this entry was my first mistake. This entry actually is what is what created the spiral down. So let me show you. Here's the entry at 78 cents, and before I entered, let me just walk through what I did. So anytime I don't follow callouts very frequently at all. This was the only trade I took on Friday, and got a call out. Looked at the chart. The only time I do it is if I look at the chart and I understand it, and it makes sense to me, and I see the trade. So in this case, I did see the trade, or at least I saw a trade. And here's the trade I saw. I looked at it, and immediately I can see this consolidation. Immediately, that's what I see. I am a pattern break trader. I scalp pattern breaks and momentum. So this is the first thing I saw. I see a bunch of levels right here. We have the bottom of the 1 minute. This is a 1 minute chart. We have the bottom of that is support. We go down here from open and then pop up and reject. And then we break through that level down to pre-market low and bounce off pre-market low. We use that same bottom of that candle for resistance. That was support here in the 1 minute. Now it's resistance. We come down, make a higher low, and we push up past that. So I'm seeing this already. I see a W pattern. I see a reversal. I see a consolidation that we can break up out of. Trade makes 100% sense to me. I got in here, which is a bad place to get in. So that was mistake number one. The reason? Because he got in here. So he was already ahead of me. So this is a risky entry, but the risk reward on this is much better than mine. Mine has a chance of going all the way down and breaking this. His has a chance of going halfway down and breaking this lower trend line. I don't know if he's playing the pattern of the levels, but I play patterns. So my stop loss this pattern isn't broken for me. This trade isn't invalidated until it breaks that. So that was my first problem, is my entry. I chased it. He got in at 78. I got in at 98. Even though it was just this little bitty move, we're in 0 DTEs, and 78 to 98 would be a really good place to scalp your first, scale out, right? 78 to 98, 20 cents on a 80 cent trade. That's 25%. So you can get 25%. I entered at 25%. He was up 25% when I entered. Shoot, I'd be scaling out. That's what I do. I scalp. So my first scale out is between 10 and 20%. Depends on the momentum, depends on the movement. Boom. I'd be out if I was him. Of course, he doesn't trade that way. He trades bigger moves. So that's why I got in. I was like, hey, man, I know what he's looking for. He's looking for a breakup of this consolidation pattern. Or he's probably watching this. Here's a 5 minute chart. He could be watching a 5, 10, 15, whatever. But on a 5 minute chart, what you see is we open up. We have this double top. We break down. We bounce off pre-market low. We have a lot of wicks. We have dojis. we get above the 9 EMA and the VWAP, and we close above all of those plus this level at 160, whatever, 166.35, 39. And now we have a reset candle. So we're in the middle of a reset candle. And this big move was on increasing volume. So now we have a reset candle, lower volume, okay? This could be a 3-bar play up. So what I'm playing is this 3-bar play up, right? On the 5-minute. I've got the 5-minute down here. I'm playing this 3-bar play up. Makes a lot of sense. So I get in at the point where I should be getting out if I got in with him. Or at least not, maybe scaling out. Let me put it that way. I'd leave some runners. So that was mistake number 1, is getting in way too high. Mistake number 2, this is my small account. So I got in at 5 contracts at $98 a contract. I got in at $500 just about on an account that had a balance of $1,100. It's mistake number 2. So mistake number 1, getting in too late. Mistake number 2, getting in way too heavy for any account, small or big or whatever. This is way too much to get in, especially when it's not even my trade. I understand the trade, yes, but I wasn't following it. I don't have a feel for the trade. I understand what he's doing. My stop loss is below here, right? So I understand what he's doing. I've got a stop loss. My TP is going to be this level. My scalp is going to be that level if I'm him. I do see that we've got some support resistance here, right in this range. So I see a morning consolidation right at open that we broke down from, and now we're just below that range. So if we pop up and use this as support, this could be the pop-up range, and then we get support. So, this all makes sense to me. So I get in, we do that, we move out, we move sideways. And what I didn't realize is, if we move sideways, now that pattern isn't really there. Now it's kind of extended out. My consolidation pattern's getting out further. Now it looks like we're breaking through. So now it's looking good. Okay, now we're getting some follow through on that. So my consolidation pattern is really pushed out to here. And we're moving up on that. And then we move back down. Now, here's mistake number 3. Mistake number 3 is, as I move out to that, we're up at 110, 111 at this peak. My rule is I get out at somewhere between 10 and 20%, depending on the momentum of the move and how well it moved. On 0 DTEs, this movement, this volume is low. This volume has not picked up. I don't have a move. This is telling me I shouldn't be in, right? I don't have any volume yet. This is telling me I should not be in. So I should have gotten out of my position at 10% there. That would have been the ideal place to get out. 100% ideal place to get out, because within 4 candles, I'm not getting volume, I'm not getting momentum, and I'm a pattern break momentum trader. Pattern breaks, if it's a successful pattern break, comes with volume. This didn't have it. So that's mistake number 3, is not getting out here. And what happens right after that? We drop down. So now begins a string of mistakes that this is where you start to blow up accounts. So I've got this consolidation pattern. Now the top I can adjust because that just changes the breakout point. The bottom, if I have to adjust the bottom, I've kind of invalidated my trade. This one I've just invalidated the breakout, which is a different set of rules that you have. If your breakout's invalidated, then you follow the price action to see when you should get out. And the price action was telling me this is a get out. It didn't keep going up slow. It went down. So here's where I should have exited, right here. And if not here, retest and the 3-bar down, the 1 minute 3-bar down. Again, I know he doesn't play the 1 minute. I do. I take a call out and I have to trade it the way I trade. So we got to this peak, and what did I do when I should have been getting out? I added to my position. And you might ask yourself, hey dude, that's your stop loss. You set it back here when you got in. This is where you'd have to get out. Why are you adding to it? Well, here's where mistake number 4 comes in. Or is this mistake number 5? So I got in late, I got in heavy, I didn't scale out. Yes, this is, I didn't get out here either. So that's mistake number 4. This is mistake number 5 of getting in another contract, and here's why. Look at this, and then come back here. Then I started thinking, what is he thinking? I changed my mind about how I was going to trade this, not to how I'm trading it. I didn't want to take the loss, so I thought, well, how's he trading it? Here's where I should have gotten out, and what do I see here? I see that we popped up, double top, rejection to pre-market low, bounce up, wiki, because we got this support here. We get our resistance, support turned resistance. We can't get past that. We bounce back down, and now we push up high. We get over that level. We hold this level, and we hold the 9. So we get above the 9 with volume. We have a reset candle with low volume. Now we have a red reset candle with even lower volume. And now we've got a red candle that's above the 9 with still lower volume than these. So net, my pop up has more volume than the red candles. And I'm above the 9. So now I switched from being a scalping trader. I switched my plan. Not because it was a better plan, but because, not because it was a good plan, but because I didn't want to take a loss. It was better than my original plan. So I actually traded, I traded against my plan. I didn't follow my rules. At this point, I've probably broken every rule I've got. So that's why I added. I'm like, hey, we'll bounce off the 9. We can still make our move. And I added again. Why? Because we can still bounce off. I mean, this is still that same candle. We can bounce off the 9, still make our move. So boom, we roll up. I add again. You know, I'm thinking, hey, we're going to make our move. I'll be in for 8 contracts. Good to go. And I average down. You know, why do you add down here? I average down, right? If we're going to bounce off the 9, yeah, I'm going to add here. We bounce off the 9, I'm better off, right? Not really. I didn't add to that because there's two ways to add to your position. One is the right way, one is the wrong way. The wrong way is to average your price down. The right way is one of 2 times. Either you're getting confirmation that your trade is moving the way you thought it was, and your first entry was scaling in. In other words, it wasn't a full entry. It was a partial entry. You were doing a partial entry until you got confirmation to get your full entry, and now you have the confirmation. So if I would have gotten in down here, and then we broke out with volume, I might add on the breakout of that pattern. And then I might, start scaling out. So if I added half my position here and half my position at the breakout, and then we go up. So that's one time. The other time is if it's just a legitimate real entry. Like if you weren't in the trade, it would be a legitimate entry on its own. So that's also when I add to my entry, and it's good. It's a good add. A lot of times I actually double my entry, because if my entry was good to begin with, and now I've got a second entry, like we push up and I scale out, and then we retrace and we retest a level and then start pushing up again, I might add the same size because it's a second entry to that trade. So those are the good times to add. This is the bad time to add. And what proceeds to happen is that I proceed to add to my position more as we go down. Again, not because, does this look like a bullish price action right here? Is this bullish price action? Absolutely not. If you look over here, is this bullish price action? Absolutely not. We lost the 9. I should for sure be out here. At a minimum, I should be gone right now. I'd be 50% down or whatever, but I should be gone. And I just keep adding to my position. Just keep adding. So, and why did I add? Because I'm looking at this going, hey, I've got a high, I've got a low. I've got a lower high. Now I've got a higher low. I'm still in a consolidation pattern. So I'm telling myself, I'm still in this consolidation. I'm still in a consolidation pattern. This is what we're doing. We're in a consolidation pattern. And it keeps going. And I keep going. Now at this point, I have actually, At this point, I've got almost all my money in, almost all my buying power. And here is the last of my buying power, right at this, the second high or low. And this is getting tight. This is getting tight. So I had like, I don't know, 16 bucks left after this. So I've got almost $1,100 into this. I've got almost 100% of my account in this. This is how you blow up an account. You average your price down, not because it's a better place to enter, but because you're trying to escape. And then you end up full port on a bad trade. What does this look like? This looks like an asymmetric triangle, or a symmetric triangle, I'm sorry, and a symmetric triangle. This is a symmetric triangle. Symmetric triangle tells you the direction is not determined by the market. The market does not have any indication in what direction this is going to go. The market doesn't know. Symmetric means that they're making up their mind as they get to the end here. So as we get to here, it does break up. I scale out a couple here. I get 10 out here. Then I get 2 at break even. I mean, I'll show you how this played out. And I actually chart my patterns on my options price too. So I scaled out a couple. Well, it wasn't there. I scaled out a couple of them on this candle. I can't remember what the price was, but it was somewhere like here. And then I scaled out 10 of them up here. So I scaled a couple on the way up because we broke this high here. Now I'm over in this chart. We broke this high, and then it looked like we were going to come back down. So we broke this high. We went up. It looked like this was like another move down. So I didn't want to risk this retest being down. So I took a couple here, and I was going to take the rest down here near break even. Just, again, I was originally just trying to get out of this trade. Then it started going my way. I had my limit order set up here. I usually set it for just below my level because it doesn't always get there. And in this case, it didn't even fill them all. I ended up with 2 extra that I had to take in this candle. Yes, in this candle. So this high was now my break even. So if you look at it, this high was my break even. My entry was here. This high was now my break even. I'm lucky for being in this thing over an hour that's all that the theta had burned. But anyway, so I didn't even get filled on all of them here because it was only up there for, a nugget. And I thought it might push through. A lot of times it'll wick through, and I just, for safety purposes. But so I set 2 of them at break even and got out of them at the bottom of this candle. So yeah, right in there was break even. And I got out of the trade. I started with 1,100. You see, I got 1,400 here, so I got $322 out of the trade, minus the commissions for 14 trades. So I spent like 25 bucks on fees, 25 bucks on one trade on a small account. That in itself is horrible. But I full ported in, got 30%, 29% or something on this, and it could have just as easily not broken up here. It could just as easily have broken down back down to pre-market low, or worse, fallen from there, and I could end up with $200 or $300 instead of making that much money on it. So yeah, this is a really good lesson in what not to do, and my rationalization was more like a day trade with next week expirations. It wasn't like 0 DTE. I mean, that was a scalp. This was my only exit. This was my only good exit for that. Here's my second good exit. This would have been my good loss. It would have been below my level, broken my pattern. It would have been horrible to be $100 down on an $1,100 account, but better than $700 down or whatever. Yeah, so that's what I did. It's a horrible trade. I don't do very much. I'm generally a green trader. 70% of my trades are green. 70% of my days are green. Most of my losses are between 0 and 15%. And every once in a while, it's almost like I don't know. I talk myself into seeing the chart the way I want to see it so that I can trade it the way I want to trade it. I was seeing a high, a low, a lower high, a higher low, lower high, higher low. You know, I was seeing this whole consolidation work out, but you can't rationalize that when you got 0 DTEs and thetas burning the snot out of you in your full port. Would it have been horrible to take a $100 loss on that? Yes. Compared to where I ended up? Absolutely. But the problem with winning a trade like this is it gives you a false sense that what you did was right, when actually what you did will destroy you. It will destroy you the next time. That's how you, literally how you blow up accounts. So if it would have been my last $1,000, I wouldn't be trading. It would be done, you know. Fortunately, it's not. But, you know, half the reason that I wanted to post this was because it's so embarrassing that maybe maybe this will keep me from doing it again. I just need to be better disciplined. I need to be disciplined all the time, not just most of the time. You can't be disciplined 99% of the time, because the 1% you do something like this and it doesn't go your way, you've blown up your account. So that's the bottom line. I'm better than that. I'm a better trader than that. So I think we just all agree we won't do this now that we've seen what it looks like. Now that we've, you know, I had to live through it. It was a uncomfortable, miserable, horrible hour and a half between when I entered and when I got out. I want comfortable trades. If they're not comfortable, I should get out. That's kind of that's a decent rule. If it's not a comfortable trade, just get out, even if it's for a loss. So hopefully y'all picked up on something on that. I know this is long. I apologize for that. I had so much to say I couldn't get it in a review, and barely got it into a video that most people probably didn't even sit through. So, but if you did sit through it, I appreciate that. Hopefully you learned. Let's all agree never to do this.